Good morning, ladies and gentlemen. This is Chris Buss with Traders Profit Compass with your morning look at markets for Friday, September 17th. It is 6:46 as I'm starting the video. A little late out of the gate today, but fortunately we don't have a whole lot to talk about because at the end of the day yesterday there wasn't a whole lot of changes. But of course we'll go through the charts and just get everybody ready for to wrap up the week. Don't forget to run your video player at 1.25x. I think you'll like that speed really well. Taking a quick look at futures, equities are off about 0.3. Gold and silver are up a little bit, but they got hammered yesterday. What I'm going to do today for you is go through and refresh the gold and silver and minor charts for you. I'll do a separate either a blog post or a video on that this morning because, I mean, now we're down at the bottom of the range, and depending on if you want to get involved with gold, of course, getting a longer term position at the bottom of the range, you know, if you want to get some duration with that, it might be a good trade because it's been toggling between, well, the ceiling's been 1835, so that's like $100 overhead, so that might be an interesting trade. Oil off 0.6. Nat gas looked like it broke yesterday, but then recovered. It's up 1% today. Copper's up 1%. Nikkei's off 0.4. And of course today we've got the big quad witching where all of the options roll off for individual names, index options, futures options, the whole 9 yards. So in the past few cycles, the OPEX, the quad OPEX has not lived up to the hype. I'm not saying that I'm wishing for all this volatility. I'm always ready for it. You should be ready for it. But in the past, they've just kind of held it in a range and ran out the clock. So it hasn't been what it has in the past, where you get a lot of crazy moves. And speaking of crazy moves, if you are going to be involved today on an intraday basis, you would be well served if you're in the futures market or with options. If you're trading something today, is really stay on your toes, and it's not going to be like some random Tuesday, or don't treat it like a random Tuesday, like nothing's going to happen, and then you come back and you didn't have a stop in or weren't aware and let a trade get away from you. So just use an extra element of caution today and awareness as you're trading, because these market makers can, as we know, do anything they want. And then we've got the University of Michigan sentiment. I think that comes out at 10 o'clock. That has moved markets in the past on big moves, so we'll have to see how that goes. And then, of course, next week we've got the FOMC announcement on Wednesday at 2 o'clock. So as always on a Friday, especially today, double check all your positions. If you've got stuff expiring today, make sure that you've taken care of everything, rolled the positions you want to keep, close out the ones you don't want. That'll avoid any unwanted surprises tomorrow morning with assignments and all of that kind of stuff. So let's get into it. I'm going to blow through this rather quickly today. Bond yields ticked up. We're in what I consider the sweet spot between 1.3 and 1.4%. In the range above, that's going to favor cyclicals. In the range below, it's going to favor bubble tech, high valuation stuff. We're in the middle. I think both scenarios can work. Of course, with rates ticking up, TLT ticked down, still above this lower range here at around 149, call it 149.50. The places to look for on the downside are a break of this level. Really, a break of the 200 will get it going. This whole thing here has been in a choppy range for a number of months, or a breakout above 152 would be really significant. VIX, pretty wide range yesterday, but they closed it more or less where it opened, right here in the middle of the 18s. I think that's still yellow flag country. I think if they can push it below 18, that's going to be very, that would be a bullish development. And then anything over 20 has got to be really cautionary, especially if we were to take out these prior highs at the 21 level. Equal weight SPY. I mean, we were off 29 cents, but notice we came right back down to the 50 EMA for a tag in the morning, and then they kind of brought it up in the afternoon. So I remain focused on having that 50 EMA hold, and then recapturing the 8 and 20 day exponential moving averages, and you can see that there's a big convergence right at this 155 level, where everything coincides. So there is some overhead resistance there with the moving averages. SPY daily, very much the same thing. We had early morning weakness, came down towards yesterday's lows, found support there, and then they brought it back up in the afternoon. Had a weak last half hour, but right back into the thick of it here with the 8, the 20 day, and this larger volume over price resistance bar here at 447.50. I would, as we've been discussing all week, on the downside, you've got to keep 442.50 in the crosshairs along with the 50-day moving average. We don't want to see price drop below that. Here on the 2-hour, you can see this was the run-up on Wednesday. We opened weak on Thursday, came down, had that long tail bar tag the lows of Wednesday, and then they more or less had a V-shaped move into the close before it got a little weak in the end. And here you can see that V-shaped bottom going down in the morning and up in the afternoon. Of course, that would have been a great trade if you were in that on either leg, or the whole in it for the reversal as well. So if you got that trade, that was a really nice trade. You can see here that we're right at this 447.50, 448 area. Get a breakout above that. That would be productive. Notice that we've got the first higher low right here, which is a bullish development. You want to start seeing higher lows and higher highs. We really didn't get the higher high, but if we were to carve out a green day today, then we would start having a higher high here and then one up here if we were to finish nice and green today. Qs just hanging on a knife edge right here inside this rising wedge. We did close above the 8 and 20 day. So that's a bullish development. What we want to see today, of course, is a green day to get it well inside of this wedge and well above the 8 and 20 day moving averages, and that would make me feel a lot more secure heading into the weekend. But on the downside, you got to be ready for, an impulsive break below this wedge, and that would be, from a technical standpoint, a sell signal once the daily impulsively drops below this rising wedge. That would be your sell signal. And most definitely, if we came down and lost the 50, that would definitely turn the chart quite bearish if we drop down that far. What I've done here, just drawing pictures. I mean, nothing really changed yesterday. Is I boxed in this trading range, just like I boxed in this $3 range up here. We've basically got a $5 range here from, just roughly speaking, 379 to 374. So if we were to break higher today above 379, of course, that would be bullish, not just because green is better, but because we would be back up in this $3 range, and then our technical target would be the top of the prior range up here at 382. So that would be, this level here is taking on more importance. Why? Support, 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 and then resistance, resistance, resistance. So broken support becomes resistance, and now we're right back up to that level. So if we were to poke above and hold it, then that would be a productive and bullish move. Here was the detail on the 30-minute chart. Came down, then reversed it, and more or less drove to the close up near the finished on near the highs. We had a little back off into the close, but nothing major. IWM is still wrestling with 222 and 224. Unless you want to fight with it, on a 5-minute chart, you're welcome to do that. But really, bigger picture, within this bigger trading range, you want to see 222 recaptured, and then 224 recaptured, and those are your buying levels on the way back up. And then we would have an impulsive move higher off the floor, a 50% pullback. You can see I have the fibs there, and then you get that A, B, C move. But the whole key is being able to recapture 222 and then 224. And then even if you're not someone who, is super active in IWM, if we were to recapture 224, I would think that would be a good duration type of trade where you're looking for a move to 233. And I think if we accomplish all that, you're probably going to see SPY and the Qs be advancing as well. So have all the indexes synced up. Yesterday, notice that morning weakness. We had opened right at 222, and then we had a flash move down to the bottom. You can see the long tail on this bar here came right down to 220 for a tag. And if you were watching that on small time frames, you had a pretty good chance, if you were actively trading that, to get long there against 220. That would have been a very objective entry. and then you got a nice lift in the afternoon. Now notice on this chart, we've got a higher low, and then over here we've got a higher high. Notice we had a high here, came down, and now we have a higher high. So if IWM can keep it together, maybe come down here, get a bounce off 221.50, and then go higher, we would have a series of higher lows and then a series of higher highs on short time frames. And that's the beginning of a trend reversal. As always, I really appreciate you longtime listeners staying with me. Do me a favor and pass the link along to others in your social media circles and other traders you might know. They may benefit from the work. Viewers new to the channel, I really appreciate you spending some time with me this morning as we head into OPEX and the weekend. I hope the commentary will help you with some objective levels and some key thoughts heading into the day. If you like the commentary, please subscribe to the channel and hit the alarm bell. Leave me a comment, and also look over in the show notes, and there'll be a link there for you to go to the website, drop in your email address, and then get all my content morning, noon, and night delivered right to your email box. So it'll be real convenient. So moving along, Facebook still needs to, is still dealing with that negative news that's been out there on the name. And so today, we've got a downtrend line and overhead resistance at 373 and 375. If price can take those out, then that opens the door to go back up to 379 and 384. But you can tell, price is reacting at the levels that you would expect it to. So I would be keying off at 373 and 375. And and if it were me, if I were not actively trading it, the duration position, at least in my mind, would be not here at 373, but here at 375. For instance, if price came up here and was able to take out 375 and you wanted to have a swing trade on that, then you can get long, set your stop, below, maybe at 373, and then depending on whether you're going for 379 or 384 at the top of the box, then you can set up your your option trade that way. So just because once you get back into this prior range, the range between 384 and 375, once you re-enter that range, the target becomes the top of the box. So you got from 375 to 384. So that would be a lot more compelling than trying to get long 373 when you've got this big trading range overhead as resistance. Apple, came down, found support at this predefined level at 147.50, got a bounce. Again today, I think 148.50 is your pivot. As long as it can hold that, the door's open to 149.50 and then 150.50. Get back up in this range, start printing. You've got a higher low, and I'll try to get a higher high and see if we can make some progress turning the corner here in Apple. Tesla remains looking good as far as I can tell. We've got really the 755 area is your pivot. There wasn't a ton of activity yesterday, but at least it wasn't bearish, right? So it held its own, held right into this pivot at 755. I think if you get a break higher, you're looking for 770 and then 790. Nice technical trading in Microsoft yesterday. I really like seeing that. Remember, we had discussed, we had this move off the low test the other day, and then the announcement that they raised the divvy and the buyback. So we had this run up to 305, and then yesterday in the morning weakness gave you a beautiful opportunity here if you wanted to get long Microsoft, to get it at 302 when this gap here held. That was a nice opportunity for it to, when it made the turn, went right back up to 305. So that's pretty constructive price action. Now, going forward, remember, above 305 is blue sky. And I really think that if you wanted something in mega cap tech, this sets up really well, because you can get long against 305, which was, is the all-time high. And then you've got all this as support underneath. And you've got a measured move of essentially $11 from 305 to 294. That's $11. You add 11 onto 305 and you got 316. So that would be, your target way up here. So I really like that setup. And if you need or want a long, I think that sets up well. Amazon, a lot of ended up not being anything at the end of the day, up 0.36%. You can say, oh, well, that's nothing. But actually, if you were watching it, you had a move down to support here at 34.40, and then you got the bounce up into I think it tagged, what was the high? Yeah, it tagged 34.90, 92 actually. So you had a move from 34.40 to 34.90. I mean, that's $50 back to the free 50 club. So that was, if you're actively trading that, $50 move is nothing to sneeze at. So I think, again, we're right back here to where we were yesterday. 34.70, 34.71 is your pivot, and then look for 35.10 and 35.40 on the upside. And of course, you got your support levels just below. Google, not a whole lot. Got rejected here at 28.90. The weakness, like everything out of the gate, came down here, and then your buy would have been on the recapture of 28.60. And you didn't end up getting a lot, but if you were interested in a long overnight or something like that, you've got your entry here at 28.60, and then today, of course, you're hoping for a continuation and then a breakout. So Google remains a strong stock. Netflix, very much the price action like the other ones, where came up to this well-defined level at 584, pulled back in the morning, and then moved up in the afternoon. Not very impulsive. Didn't end up having a lot of travel. I think today, what you're looking for is if you can get a breakout above 590, that'll kind of send it on its way back up. But if you get, of course, if you roll over, then you've got 584 and 575 as potential short entries if you're trying to actively trade it. And I would say, given this big void down here below 575, if you were interested at all in taking a short on Netflix, that would be the place that I would do it, right at 575, because you've got $15 of open air, where I think that would move rather quickly if things started to deteriorate. Semiconductors, good day. Gapped down, drove up to the highs, right to this resistance level at 276. And, above 276, you're in blue sky. So blue skies, you got to buy. So, keep that in mind. Semiconductors have been relatively strong. They have not had a ton of turbulence like some of the other stocks. So the sector remains pretty much constructive. And remember, going way back to our daily chart with our big trading range, our measured move target is around 295. So there's still plenty of upside based on that measured move target from that big consolidation range we had earlier in the year. So if you're looking for a long and you get a break above 276, that would be a really good anchor point for you on semiconductors. Just wanted to show AMD real quick. We had talked about having these levels here, 105.50, 107, 109. And so we had the morning weakness and then found its footing, moved back up. And if you were interested or actively trading that, your buy point would be on the recapture here, whether you got it at 105 or 105.50. You got to push up to 106.75, even higher right in here. So you almost got your move to 107. And so now today, if you got a pullback to 105.50 that held, you could re-enter long again and look for a bounce to 107. Or if the stock is strong and you get a breakout from 107, then you're looking for 109. So those are the key levels. And then one last chart here. I sent this out during the day. Looked like Palantir had a pretty impulsive breakout yesterday. A lot of call buying in the name. And it's coming out of a $6 trading range that it's been in since March. So on this particular stock, you're looking for, 33, 35, something like that, as a measured move target. But you can see all the EMAs are attractively or bullishly stacked. That's what you want to see. And actually the catalyst was probably back here. Hard to see, but there was a gap up where probably on earnings or something, gapped up, spent some time consolidating, moved up to the top, spent a little time consolidating right under 27, and then finally got the breakout yesterday. So let's wrap it up there. We're in this flux period now. What I call use that stupid word, transitory, right? We're not in full bull mode, and we're not in full bear mode. We're kind of in that neutral transitory position, waiting to see which way this thing breaks. We've got OPEX today, we got the FOMC Wednesday, we got price wrestling with the 8 and 20 day. So I don't think, although I forward you setups, I forwarded several over the last several days. I think this is a time to be very selective on putting on duration risk with these catalysts in front of us. You don't want to be maxed out long here. Excuse me. And you don't want to be jumping the gun on, major short positions. Just, manage your portfolio, keep it comfortable. Don't get way out on a limb. We're heading into the weekend. As I always say, the last 2 hours of the week are going to be very important to kind of measure risk sentiment. Are people comfortable holding into the weekend, or do they want to dump everything and not have that weekend risk, especially heading into the FOMC on Wednesday? I would expect, or I wouldn't be surprised if like Monday and Tuesday were, soggy to neutral. I can't really see some kind of ripping rally Monday or Tuesday right in front of the Fed. I could see some jittery behavior where people want to, get rid of a little risk ahead of Jay Powell's announcement. So we'll just have to wait and see. So I hope you guys have a good day of trading today, and also have a nice weekend. Get ready for next week. So this has been Chris Buss with Traders Profit Compass. Talk to you next time.